the token is launched, it exists, but it doesn't have the same adoption, or they didn't manage the tokenomics properly. I want to make sure that my guys are, focused in, and this use case makes a lot of sense, and that's why we're putting our money.
What are the primary factors that influence the valuation of a tech startup?
Yeah, it's a good question.
Particularly emerging tech in the Web3 sectors for us here.
Yeah, I think this has kind of evolved over time, and it continues to evolve. But I kind of made reference to it earlier on. But the companies that we work with that we find to be successful have a real use case, right? There's a very specific case for the market need around what they're building, right? And now in the Web3 space, it's a little bit different because, we don't see traditional, call it revenue models, but you still can, right? I mean, you look at a company like, an exchange or like a Uniswap or something like that, where there are traditional kind of revenue metrics there at some level, but they also have a token component, right? Mm-hmm. And so, when we talk to companies, outside of someone just having, a meme coin, what we look at for the most part is first understanding that there's a real kind of market need for this, and there's a real use case that you're building around, right? That's one of the most important understandings that we need to figure out, when someone's putting something together. Because if you're just kind of, out there trying to put something random and trying to make money quick, there's not like a long-term use case to building a business, right? And if you're building a business, you want that strong use case that has been validated at some level through your research into the market, right? And so that means from there, diving into, what's the market size and growth potential for what you're putting together. And in many ways, in that sense, it's very similar to any other kind of emerging growth, kind of Web2 kind of concept, right? But we're kind of marrying that with the concept of, putting things in a decentralized kind of capacity. Maybe you'll have a token. You don't have to have a token. That's the other thing. If we're talking about Web3, you don't necessarily need a token. So if you're putting this together, you're making sure there's a use case for what you're putting together. And then you got to ask yourself, do I actually need a token? Is that incentivization structure something that's necessary for this? Or am I building something that's more kind of, infrastructure based, right? Like tools, like picks and shovels and tools, that kind of thing, where you're going to support the existing ecosystems. So, when I look at it, in terms of the things that, I really care about, it's that kind of use case. It's understanding the potential market size and growth potential. And we're at a point where, as opposed to call it 10 years ago, where, there weren't other tokens out there. There weren't other Web3 types of companies that I could look to necessarily. I mean, I brought up Ripple, but that's just one kind of, call it success story at that time. But, if I looked at, the tokens that were trading out there, and there are no public companies, right? It was before really Coinbase, right? Mm-hmm. So you couldn't get your arms around what that meant. So now though, we have, there's a few public companies out there. There's a ton of token projects, right, that we can look to as success stories, like a Chainlink, right, like a Solana, like companies like that, or we can look at and say, hey, how does this fit into these types of ecosystems? Market sizing compared to that, how do we compare to that? So those are all things that we care about. In addition to that, I would also say the team and expertise, right? This, again, similar to the Web2 space and just traditional stuff, but in addition, right, it's guys who you want to surround yourself with as many folks in the industry, right, as possible who have a knowledge base around this, right? Mm-hmm. And so it's one thing to talk to people who have started like an e-commerce company, right, or just and there's nothing wrong with that. It's just that if they haven't been in the space yet and don't understand the particular mechanics that are involved around it, then I think you're going to struggle a bit, right? Because how do you marry kind of the product and the technology all with all of this stuff at the same time without not really doing your diligence and talking to people who have experienced this firsthand? And I think that part of it can't go kind of overlooked in this process, right? exposure to the right people so they can understand the product technology, how traction adoption works. And then, biggest part of this is really in the Web3, just the concept of like, and you guys talked about this, like in some level, like the network effect of things, just in general, like no more like industry is this more kind of prevalent than the Web3, because that concept of community building, right, and building out a network is incredibly important for what we put together here. And if I'm starting a company, so you just kind of rehashing some of this, understanding market size, growth potential, team and expertise, product and technology, talking to the right people to understand traction and adoption and the potential network effects. Those are the things that I would really hone in on. And some of it is a little bit esoteric, but it really comes down to, communicating and talking to the right people in the space. And, I think there's a lot of transparency in this industry, more so than the typical kind of VC startups kind of world where, and that's the other thing, like you're going to raise money and all of that, right? It's always been kind of owned by certain VCs and other folks in the space. And now, while you still have VCs very much involved in it, the ability to get out there and actually talk to people and get information about how this works, I think has never been easier, right? There's no like, oh, okay, I feel like I'm in the dark about something, because you actually do have access to this, right? It is, I mean, I can go to a bunch of user groups, Discord channels, et cetera, to start and just get the right information from people. And then you'll be surprised how many people you might know who understand kind of exactly the thing is that you're trying to put together. So those are a few of the things that I think are really important if I'm thinking about starting up a potential Web3 venture.
Is there a particular methodology around valuation that you go for, specifically early stage startups, and how might they practically align to those to ensure that they're, when they hit their next round or their big seed or more Series A, especially in the Web3 levels of growth, that they've done the right things?
Yeah, it's a great question. And some of it has to do with, the underlying, concept that we talked about before of, understanding your use case. But, for the most part now versus where we were again, 10 years ago, there are, call it market comparables that you can always start with, right? And work your way back, right? I'm not going to say I'm going to be worth, the total value locked of, what eigenlayer is today, right? Right off the bat. But I could say, okay, look, here's eigenlayer and here's a bunch of other comps that are in the space. And I can work backwards, right? In terms of, that could be the value of the token project. And there's some sort of component that it's built into, what the value of the total company is. A lot of times at early stages, the value of the token, well, for one, doesn't exist yet. So, that sliver of the protocol is very small compared to the overall value of the company, which usually comes into being like, call it the IP, the network know-how, all of that kind of stuff is where the value of the company is at a very early stages. And if I think about that and I look at kind of where some of these companies were at early stages of their financing, that's a way to kind of look at what my company could be worth. And then, you can look at what the token could be worth in the future, but, there's a huge discount that gets applied to that, right? It's just naturally like what gets applied, but that's kind of the interrelationship between the two. But for the most part, it is still very market driven, right? But again, I think we all have more access to that type of information than we had before, because a lot of these projects are very public about, some of their financing rounds and implied values of things. And so you can look at it from the market perspective. If I'm looking at trying to raise and where I am compared to where other projects were at this stage. And so, those are some of the things that I look at. And then in terms of, call it the qualitative factors, we talked about it before, but the strength of, the team that you're coming to put together, the product and the technology that you have. I think understanding that if there is a particular use case and you're building a product around something, and the underlying technology, understanding that component of it, and when you're doing evaluation, certainly is a key factor that comes into it. And so, again, we look to the market at some level, and then there's other ways to kind of price things at early stages in terms of understanding, what does it actually cost to put this together, right? And you can work your way back there. And that's a very kind of basic way to look at it, but that's like your kind of, your low kind of, call it tax valuation, if you will, of how to look at something, right? What's the minimum cost it takes to put something like this together? And then you marry that with some of the market factors out there. And then you can come to a conclusion of where, maybe a seed type of round should make sense for you, right? And so that way you understand both sides of the equation when you're negotiating with potential venture investors, right? Because they're going to say, what's the use case? What are the market dynamics to this? Why should this make sense? Well, you should have that compelling story, right? At the end of the day, that narrative actually has not changed in any type of kind of capital raising environment. You still have to have a very compelling story and illustrate that there's proper growth here. So, a couple of things there, I think that makes sense there from a methodology perspective.
It occurred to me that we didn't ask you the straight question. Have you ever valued a meme coin?
Yeah.
and that's how cute the dog is.
I can safely say now we've valued close to we've worked on over 1,000 projects, and we've worked with individual tokens and companies in the space, probably about 400 different ones. And I don't think any of them have actually been a traditional type of meme coin at all. They're all like either some sort of utility token or governance token, something like that, that are supposed to have, a real use case. Majority of them have, I think most of them are around or still are, and a lot of them are really successful, that have existed in the market. Other folks have, they've had to reinvent themselves, right? And we can get into this in a bit, but, there's certainly use cases where, there's trial and error involved, right? Something that made sense at early stages. But now the token is launched, it exists, but it doesn't have the same adoption, or they didn't manage the tokenomics properly. They're trying to figure out, with, the right folks of either market makers and liquidity providers, how to manage the token in of itself amongst the different entities that own it. And there's a whole host of issues that come around there. But we've seen a fair amount of tokens and projects that struggle with that today as well. So, but no, haven't valued a meme coin as far as I know. I'll have to look back on the list, though. I mean,
I thought it was worth a punt. It would be a good story, right?
Yeah, like
dog coin,
I remember this crazy dog with hat. And Neil, I wanted to really quickly touch upon something that you said that we found from the technology side of things also when it comes to valuation. Like we had often clients coming to us, greenfield projects, and they're like, "Oh, we want to build this." And we're like, "Sure," and they're like, "Okay, do you know what it costs?" We're like, "No, we don't, but we'll do a workshop." We'll do research, do a workshop, and after that, we'll give you a report, with the tech stack and narrative and, everything involved. And with this, you can go raise. And they were like, "Yeah, I don't think we're going to need it." I was like, "I think you do." And interestingly, we started like 3 years ago. People were like, "Hey, what?" They used the report anyway, but it helped them raise for the exact thing that you just said. The minimum valuation, what does it cost to build this? And then, we spoke about POC, MVP, and version 1, like product version. And we got feedback from our clients. They're like, "That document that you gave us was super helpful in explaining the numbers." I'm like, "Okay, that's great. It's just a small part. It's a tech part, but it's so valuable." And I wanted to point that out because I think it's often people like, "Oh yeah, we'll just raise a bunch of money and then we'll start building." It's like, yeah, but you don't know how much it costs because you're sitting in an industry that is completely skewed when it comes to technology. It's not a serial entrepreneur comes in Web3 and is again a first time founder, right? So. I think it's a very, very good point. Glad to hear that you guys are looking at that too.
Certainly that comes across a lot on our side. Trying to understand. Like if I'm an investor, I do want to know where the capital is going, right? I mean, it seems like a logical kind of concept to ask, right? And so understanding someone's thought through that process is particularly important. So I agree.
So to confirm, an orange Lamborghini and a beach party is not a good
what? Really?
play.
Look, if it's a marketing-focused company, maybe. I don't know. PR-based, there's certain needs. So I get it.
All right, so speaking of, question 3 here, what are the common pitfalls? Like, in your experience, what are the mistakes that startups make that negatively affect their valuation?
Yeah.
And how can these be avoided?
Yeah, this one is, you see a lot of pitfalls that can kind of occur. I mean, at different types of levels. One is, I would say, kind of organizational kind of structuring and understanding the legal and tax implications of things. It's not particularly interesting. And the only reason I bring it up first is it's an area that, just considering what we do, it comes up quite often where someone realizes they didn't do something right, and going back and fixing it can be difficult. But making sure you're with the right counsel, call it legal on the corporate and tax side, is probably one of the biggest things that you need, because those guys are the gatekeepers to so much, right? And in this space where, now some will argue from the regulatory side that, the rules are there, I don't know what you're talking about. The rules are there. And so, and others might disagree with that concept. And so because of the ambiguity around that, you want to align yourself with the right advisors, particularly on the legal side, legal and tax side, so that, and those guys have to be like focused on this industry, right? Because there are a ton of lawyers out there, there's a ton of tax guys. But you need guys who have done this and do this for a living. And so making sure that you have thought through the concepts of, if I'm going to have a token, what type of token is there? Are there securities issues I have to deal with? If I'm going to issue tokens, are there valuation implications when I transfer those tokens? Can I transfer stuff even if it doesn't exist? If I'm moving stuff over to different jurisdictions, are there IP related issues? How do I set up the entities? If it's a Cayman BVI sub, something like that. Those are all things that you want to think about like upfront, right? You want to make sure that you have conceptualized that and talk to the right people, so that that if we go down that route, or if you want to go down another path, you've actually had those conversations. Whereas, you start something and then go down a path, and all of a sudden, like I said, you realize that it's structured incorrectly, and there's maybe a tax impact, or I have to unwind things. It's going to be far more expensive to do such things. Those are pitfalls we see happen quite often with folks who are not as kind of experienced in the space, and they're just jumping into this because they heard about it. So that's one thing, and that rolls into a lot of other stuff, I think. In terms of not kind of having a proper understanding of how the company works or how it's going to work. So then you get into the concept of, financial management and ignoring kind of things around, market demand for the project in of itself. Like, you want to try to be, this is a fine line, but you want to try to be as focused in on the use case as you can, right? Now, all startups go through this kind of start and stop. Oh, wait, we're going to try to pivot a little bit. I understand that. But to start with one thing and then jump to another thing and then jump to another thing, that kind of process is something that, I would, to the best that you can, try to avoid, right? I'm all about trying and failing, right? But you got to go all in on something and really devote your resources to that to make sure that it makes sense. And there's a ton of preliminary work that you can do around that, but trying to stay focused, I think, is, while somewhat of an esoteric concept around this, but building towards an objective is a key point here. Whereas, meandering back and forth to different, use cases or types of, products can be detrimental. And as you guys know, I mean, when you're building a tech stack, right, and someone else says, hey, well, we want to do this, and then we want to do 5 other things at the same time. We don't understand how they're going to be utilized. That kind of comes into play a fair amount.
Right.
Yeah. So
been there, done that, end up crying with founders. Yes.
Yeah.
Look, I'm not, I certainly understand that, there's a lot of different directions you can go, but trying to stay as focused as possible on that stuff is certainly very important, because again, if I look at it from the investor's point of view, what they try to do is they try to put you in like, a certain demographic or just a box, if you will, of where's the return on this, candidly.
Exactly.
How do I position you in the market? And that's how they go through their valuation kind of concepts. I want to make sure that my guys are, focused in, and this use case makes a lot of sense. And that's why we're putting our money behind them. This team has got the experience and they are locked into this. So, making sure that you have that focus and you try to stay true to the initial kind of product concept, at least the theme around it is certainly very, very important. So, just in general, to recap there, I think tax and regulatory, because it happens to be our area of focus, seems to be something that's incredibly important. And then really kind of focus in on, your particular use case and market. And from that, there's a lot of good things that can happen, right? When you just put your head down, just conceptually, and focus in on it. So, and I guess a third related to that, building in the right, really the right team around you, right? In addition to like your external folks, your internal folks, right? It's one thing to just get a bunch of buddies together and start a company, but it's another thing to make sure that you all have your defined roles, so to speak, right? So you've got the right tech guys, particularly in this space, right? Understanding the underlying concepts around the blockchain technology I guess it's so obvious, but I think it's worth pointing out that you have someone that understands, how this is going to integrate into the overall theme of what you're putting together. Can't be understated as well. So yeah, those are a few of the things that I think in terms of potential pitfalls that, we see a lot of times where people are just trying to just jump into the space because, there's that FOMO effect, right? So yeah, just a few thoughts there.
So, what are the key metrics that you think startup founders should be thinking about with respect to financial metrics, milestones? What are the most important things for assessing a startup's valuation?
Yeah, I think, it kind of, there's a few different ways to look at it, but let's just take the example of having a token, understanding what we call kind of TVL, right? Total value locked.
Yes.
Within the protocol. That's a very important metric, hard to kind of pinpoint, but certainly something that you want to think about. If it's like a staking mechanism, call it protocol revenue or staking revenue, right? Trying to model that out. Again, that's kind of correlated to the next metric, which is call it kind of user growth and retention, right? Around the token, like trying to figure that out, at least trying to model it out. Those are all things that we particularly try to understand. And then that equates to, volume and velocity of the token. All these are kind of factors that, while somewhat difficult to understand, but looking at the market and seeing similar types of protocols and how they perform, trying to derive some sort of bands, if you will, of metrics around some of those things, certainly important. So that's, if I'm putting a protocol together, those are all things that, we really want to try to hone in on, as opposed to, again, comparing to Web2, where you might look at a company and say, hey, what's, total price to revenue, right?
Yeah.
Enterprise value to revenue, stuff like that. So those are some of the differences when you're looking at something at the protocol level and how it fits into the overall company.
Brilliant. Okay, number 5, low valuation strategies. How should this is one of those questions that you have to know a little bit to really engage with. Mindful, we're talking startup founders from 0 to 1 here. How should a startup approach the valuation process? And I think this is specifically towards how much you want the company to be worth versus how much you're raising.
I think when someone comes in and puts kind of a mark on you, which is on the lower side than what you were expecting, I think going back and reassessing the value proposition, right, and the market positioning, right? Did you tell that story correctly? Did you pull the right metrics that I just mentioned, right, properly? Is your data right on that, right? And then did you describe that use case properly? I think that reassessment process is something that is fairly critical in understanding. And then, you take a look around and, do I have the right team that I've put together, right? Am I focused in on the right, not only metrics, but the right market, right? Because again, if I'm an investor, if I'm looking at, either, a traditional exit strategy from the company level, or what the interest is on the liquidity associated with the token in the specific ecosystem, I want to make sure that you've thought through those types of concepts fairly detailed, right? At the end of the day. So, I would say that, those are kind of the key areas. If someone came to me and said, hey, you're worth $5 million, but I think, to your point, I feel like I should be worth, 10 to 20. Well, you got to make the use case for that. And the use case is usually data driven. If you can, married with some qualitative factors around, the strength of your team and your overall concept.